Hi, my name is Eldos Isaac. I am the founder of EA Wealth Investment Services. I'm a registered mutual fund distributor, having 21 years experience in the Indian mutual fund industry. We are also a registered IRDA provider of health insurance and term life insurance. I did my education basically from graduation in BSc Physics. Then I did my MBA from Rajgiri School of Management, Cochin. I started my career in 2004, ICICI Prudential Mutual Funds. Then I moved to HDFC Mutual Fund. Then my last assignment was with Franklin Templeton Investments, Cochin, as the branch head. So after spending 12 years in the Indian mutual fund industry, I resigned and started EA Wealth Investment Services in 2016. We're basically into mutual fund distribution. At EA Wealth, our vision is to be one of the most respected personal finance professionals in India. Our focus area is actually helping clients achieve financial freedom and independence. We also do a lot of investor awareness sessions, both offline and online. So, which is helping clients to have understanding about the financial markets and helping them to take the right investment decisions and on the risk management side. As you know, last 1 week has been really unfortunate for the global markets. Tension started in Middle East and there is a conflict between Iran, US and Israel. So already more than thousands of people have lost life. And this war is having a humanitarian impact and economic impact also. Because if you look at the economic side, oil prices immediately shoot up. I think oil was around 70. I think now oil is around 84, 85. And nobody knows how long this war will last and how deep it will be impacted. And the oil is actually the major concern because because as you know, this tension happens in Middle East and Iran is having around 10% of the world oil reserves, and all the associated Middle East nations also have oil. So oil and the Hormuz Canal is also blocked. So a lot of tensions regarding oil passage of goods and services through these canals. So even the parties don't know when will the war end because it is actually a moving part. So the cost of living goes up. The central bankers will have a tough time. Governments will have forced to cut their budgetary measures. So these are all uncertain times. There is a lot of volatility in all the asset class in the commodities. So people are actually uncertainty. There is uncertainty because we have seen the First and Second World War and the kind of destruction it has caused. So fortunately, we pray that the war ends soon. I hope that the war will end soon because this is actually impacting all the. So the point is that since this can go to any extent, I hope all the major leaders and major countries sit together and arrive at a solution and the war ends soon. As you know, the stock market has been impacted because of this war. The moment the war started, the headlines came across all the newspapers flashing on the negative side of it. So the NAVs are down, the stock prices are down. If you look at the Indian market, Sensex is down almost 8% from the all-time high of 86,000. Today we are at 7. And if you look at the Indian markets last 1.5 years, it's been a flat and consolidating market. So every time we try to recover, there is some news that is pulling it down. So currently we are at 79,500 and consolidating, and so this is the nature of the market. So every time there is a negative news, bad news like war, the prices will come down, which is natural. And if you look at global markets are also, I think all the markets, the US markets, the European markets and the Asian markets are also selling off. So what should investors do? I think these are difficult times, but I think investors need to understand that this is also a passing phase. We have seen a bigger crisis in the past. If you look at 2008-9, we have seen the global financial crisis. Then I take all your memories back to COVID times, 2020. You must be remembering the kind of panic we had. I think our lives were at threat. We were forced to sit at homes. So as you all know, when things become clearer, when vaccines were invented, the stock prices again went up. So now, if 5 years down the line, the Sensex is actually double before the COVID levels. Sensex is 80,000 now. So if you look back, that was a buying opportunity. So every time when the market, there is negative news on the market, the price will come down. That is actually the nature of the beast. The markets, the stock markets in the global are like that. It is the nature. We can't do anything. Then if the news is negative, the sentiments are negative, the price will come down. But the million dollar question is, where is the bottom? Nobody knows the bottom, because this is related to the news, the war. If the war ends fast, market might bounce back. If the war goes slow, in previous times also, the markets, the economies have faced this kind of challenges, but it has, every time it has come back. And if you look back now, those are all really buying opportunities, because you need to understand one thing. This is what I've learned from my 20 years of experience in the industry. Good news and good price will never come together. If the news is good, if the sentiment is positive, the prices will be high, just like middle August, September. And now the news is bad, price is low. So what should existing investors do? So what they can do is that if you need the money in the short term, you need to, because suppose, assuming the worst case scenario, if the war extends for another say 6 months, and if you need money in the next 1 or 2 months, you need to plan for a backup. You have to look into other options, because if you exit now, then we will be booking a losses. So you can look for other options. You can look for options like loan against mutual funds. For long-term investors, no need to panic, because this is again a passing phase. And if you look at India, this is not directly impacted, because we are not part of this war. Because since oil has gone up, India will be impacted indirectly. You need to have confidence in the long-term outlook of the market, stay invested, continue your SIPs. You don't need to put your entire money now. Don't put your entire lump sum now. If you have 10 lakhs, you can put in a staggered way. So maybe it's 2 lakhs now. Or I think the best thing is that you have to consult your mutual fund distributor. So look into your asset allocation, look into your portfolio, and do the changes. Market outlook. If you ask me the market outlook, the short term, I don't know. A market can go anywhere. But in the long term, I'm actually confident of the India growth story. If you look at India, when I started my career 20 years back, we were at 1 trillion, and 10 years back, we were at 2 trillion, and today we are at 4 trillion. And if you look at the studies of IMF and other world leading organizations, everybody is expecting Indian economy to touch, say, 8 to 10 trillion in the next 10 to 15 years. So that is a great opportunity. So if you look at the performance of Indian stock markets and mutual funds, the last 20 years has been excellent. Good quality funds has given returns which are better than FD and inflation adjusted returns. So, and if you look at the Indian companies are really globally competitive. So at least there will be 200 to 300 companies who will continue to improve their profitability and come up with year-on-year positive earnings. So the long term is extremely bullish. Outlook is good. Indian economy is going to do well. We are actually the fourth largest economy. So we are on the path of the third largest economy in the next couple of years. So if you stick to this India and invest for long term, you can create wealth. But you need to be aware that this kind of events will happen in between, like the COVID, like the global financial crisis. But this should not shake your confidence. You should stay invested in your portfolio and achieve your financial goals. Thank you. So asset allocation. If you ask me, the most important factor an investor should consider is the asset allocation. Simply means how much money you have invested in different assets. So as you know, different assets are there. The debt funds are there. The FDs are there. The real estate is there. Gold is there. Silver is there. Stocks are there. Mutual funds are there. So as an investor, based on your risk appetite and risk tolerance level, you need to decide how much of your money goes into assets. The challenge is that if you are over invested in a particular assets, say assuming that 95% of your money is in bank FD, then you will only get say around 5 to 6% post tax. So the returns will be extremely low. And at the same time, if your 90 to 95% of money is in stocks or mutual funds, in this type of crisis, and if you need liquidity, there will be challenges because the price will be low. So you need to manage your portfolio or your asset or overall asset allocation in such a way that at any market cycles, bull markets, bear markets, you will not be impacted. You should have liquidity, you should have safety, and at the same time, you should also have the assets like stocks or mutual funds, which can beat inflation in the long term. So you need to manage, you need to understand yourself, you need to be aware of what is your personal goals, your risk levels. Then you have to decide on the portfolio, and you need to keep rebalancing this portfolio based on the changes in the markets. So you need to sit with your personal finance professional and decide on your asset allocation and do the rebalance periodically until you achieve your financial goal. So the key learnings is actually you need to understand that equities, stock markets, mutual funds are long-term products. Don't invest in equities for a short period. It can be volatile and it is extremely unpredictable. But if you invest for long term, you can create wealth. And also you need to aware that you need to be have a proper asset allocation. Don't put your eggs in a single basket. So that is actually extremely important. If you feel that you can't handle your portfolio, you take an expert guidance, and you need to have a clarity and awareness of your goals. You need to understand your risk. You need to manage your risk, and you need to stay invested, and you need to rebalance your portfolio until your goal is achieved. So I think look for financial freedom, financial independence, have an awareness, manage your risk. I think that's it for now. So happy investing. Take care. Thank you.